I'm Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Let's talk about the US dollar and what's driving its recent slide. The dollar has dropped to a multi-year low, not due to structural weakness, but because markets are anticipating Fed rate cuts and a possible economic slowdown. At the same time, the Senate is deep in debate over a $3.2 trillion tax and spending bill. If passed, it could significantly increase government deficits, which may weigh on both the currency and bond markets. The US dollar index, which tracks the dollar against a basket of major currencies, is down nearly 11% this year. That's the dollar's biggest first half drop since the early 1970s. Despite the pullback, the US dollar is still expected to remain the world's top reserve currency, backed by the scale of the US economy and the depth of its capital markets. But recent concerns from policy uncertainty to trade tensions have taken a toll on the global sentiment. The question now is, how much further can the dollar fall? Summer is here, and the markets are heating up, not cooling off. As we enter the second half of the year, stocks in North America are hitting all-time highs. Last week, both the S&P 500 and the TSX rallied to fresh record highs, powered by a summer surge. The S&P closed Q2 up nearly 10%, an impressive feat, considering it was down 10% earlier in the quarter. That kind of swing, it's only happened 3 times in history. In Canada, the TSX posted its 4th straight quarterly gain, rising more than 7% in Q2. Its best performance since last fall. Since the lows on April 8th, the S&P 500 is up 24% and the TSX is up 23%. The S&P 500 is now up 5% on the year, while the Canadian TSX is up 8%. The next big test, earnings season coming around the corner, kicking off in mid-July. Until then, momentum, not caution, is leading the market. Onyx Gold is gaining momentum, and here's what's driving the move. In late June, the company announced a standout drill intercept at its Argus North Zone project. 91 meters grading 1.8 grams per ton gold, including 17 meters of 5.3 grams per ton. That kind of high-grade result, especially from an early-stage, high-priority target, suggests serious upside potential. At the same time, Onyx is building out its capital base. Over the last couple of months, they have raised over $11 million, including an investment from strategic investor Gold Fields. With less than 70 million shares outstanding and fully funded, Onyx is in a prime position. That's not just money, that's confidence. More cash means more drilling. And strong results plus strong backing is a classic re-rating setup. The takeaway? Onyx isn't just exploring, it's advancing. And the market is taking notice. We'll see you next week.